Hello everyone to the second lecture in section 6 where I quickly want to go through a key error that support and resistance traders make while trading a breakout after a consolidation phase. It is very simple to understand, but it carries a significant importance in support and resistance tradings during a sideways price activity. Therefore guys, you will never buy at support when market is making lower highs in a consolidation phase. This means that the sellers are entering in large numbers as the market fails to reach the horizontal resistance zone that you plot once the first leg of the sideways price activity defines boundaries for initial support and resistance zone. Therefore, what you see here is repeated tests of the horizontal support as price makes lower highs. This price activity is associated to selling strength entering in the market, hence giving an indication that price is highly likely to break out from this support zone and decline further. So when you see price making lower highs in a consolidation phase, then you should plot a diagonal support to look for trade entries. Now we will study this guideline using examples. Here we're looking at 4-hour chart of gold. After a downtrend, price entered a consolidation phase on gold. Then, after first two legs of the sideways price movement, the support and resistance zones are plotted on this chart. Now to study the guideline which says to avoid buying when price makes lower highs, notice how price fails to reach the resistance zone as it posts the first lower high. I will use a trend line to draw a diagonal resistance here. Moving on, gold posted another lower high after price bounced from the support. Hence, I will extend the diagonal resistance to the right on this chart. Guys, this diagonal resistance is signaling the control of sellers as buyers fail to push prices higher on gold. And all the price touches on this diagonal resistance presented small sell opportunities before price breakout to continue the bearish trend. This is all that this guideline is about. Now let us study one more example on daily charts as well. Here we're looking at US dollar and Canadian dollar chart. Once again we are studying the same guideline. Here we are able to plot our support and resistance zones once the first leg of sideways price movement ended. Once again, notice the lower highs in this price range signaling the selling strength. Once again, I will use a trend line to draw diagonal resistance on this pair. And once the price breakout was recorded during this strong bearish candle, a sharp downtrend continued on this forex pair. So this is all you need to know when market makes lower highs within a consolidation phase. And let us continue studying when the opposite scenario occurs. Similarly, when the market makes higher lows in the consolidation phase, it signifies the buying strength in the market, as sellers fail to push the price lower. In this case, you will avoid selling at the resistance zone as it is highly unlikely that the price will break out through the resistance zone in the later phases of sideways price activity. Now let us study a final example to understand the guideline. Here we're looking at Euro Canadian dollar to study this guideline. Price went into a consolidation phase from here, and we are able to see the support and resistance zones after this bearish candle. Now notice the higher lows starting from here, and finally a sharp upward trend was recorded on this forex pair. I will quickly draw a diagonal support to explain the buying strength associated to each higher low. Guys, the guidelines you've studied here more often than not signal what is about to happen in the near future, so please study the price action carefully. This also concludes this lecture and section 6 of the course, and I will see you in section 7 where I explain very recent or present live trades that I took using this strategy with complete trade management.